Let's go to some stock picks. Alex, Nedbank.
Yeah, so we spoke about some of SA Inc. stocks being under pressure since beginning of year or even Q4 last year. And I think Nedbank also falls in that camp. They don't need to do a lot right here, in my view, to produce decent upside. So if pretty much any of the banks produce, call it earnings between 5 and 10%, I think they're undervalued. So if we are moving in an environment where economic growth is going to be, call it 1.5 to 2%, I think it's very likely that these stocks will be able to generate that type of earnings. Credit losses seems to be well controlled.
Yeah.
They don't have too much exposure to the likes of Africa compared to Standard Bank. And I think, they're relatively well positioned, specifically also if they're big corporate spending on infrastructure. So I like Nedbank. You don't need to be aggressive to make quite decent double-digit returns.
Chantal, Pan-African had results recently. The big story for me was that hedge is gone this week, I think. They, of course, are the low-cost producer and your stock pick today.
Yes, so thank you for outlining my entire investment case for me, Simon. That the hedge is gone. So that has been a big inhibitor for Pan-African over the last year and a half. And the reason they had that hedge in place in the first, the hedge in the first place is very important. They forward sold their gold at $2,300 an ounce, right? So they didn't benefit fully from the upside, but they used that money to invest in growth projects. So they invested in a Evander mine and they invested in a tailings retreatment plant. And this is going to result in their all-in sustaining cost coming further down. And it is going to result in their production profile growing probably at the fastest pace of the SA gold mining peers. So in the event that the gold price stays elevated, which we think there's a good case for given the geopolitical chaos across the world right now, and the fact that central banks are still buying up gold because of the kind of fractured geopolitics, so it's not just safe haven, it's central bank buying as well. We don't see a lot of downside risk to gold prices at the moment. We don't see a lot of upside to gold prices either, but if a company can produce gold at an all-in sustaining cost of $1,400 to $1,500 an ounce, and the gold price is close to $3,000 an ounce, the math just makes sense.
Yeah, it's called printing money where I come from. And actually, I spoke to Cooper's Lewis, and he said that lack of hedge adds about 50 to 60 million a month to their income. That's all for Stockwatch today. Thanks to, Alex from Umthombo Wealth, going with Nedbank. Chantal Marks, FNB Wealth and Investments, going with Pan-African Resources. Up next, the close. Stay watching.